As January 2026 unfolds, the global financial landscape is witnessing an unprecedented realignment, where Bitcoin has transcended its origins as a speculative asset to become the cornerstone of national economic strategy and institutional permanence. The euphoria of October 2025, when Bitcoin reached a historic peak of $26,000, was not merely a price milestone, but a definitive signal that the era of digital asset maturity had arrived. While the market underwent a natural period of consolidation following that peak, the fact that Bitcoin has reclaimed the $97,000 level in early 2026 and is currently testing the $100,000 psychological barrier underscores a level of structural resilience that traditional fiat systems struggle to replicate. This evolution is fueled by the twin engines of Web3 infrastructure and the rapid tokenization of real-world assets, a sector projected by Boston Consulting Group to reach $16.1 trillion by 2030, representing roughly 10% of global domestic product. Within this vast liquidity ocean, Bitcoin stands as the ultimate collateral and the most trusted anchor for the emerging digital economy. The most profound shift of 2025 and 2026 has been the entry of sovereign states into the Bitcoin ecosystem, following President Donald Trump's March 2025 executive order to establish a strategic Bitcoin reserve. The United States has officially recognized Bitcoin as a national strategic asset, equivalent in importance to gold and petroleum reserves. Currently, the United States government holds approximately 19,800 Bitcoin, making it the largest sovereign holder in the world. This move has ignited a reserve race across the globe, with states like Texas and New Hampshire passing legislation to integrate Bitcoin into their own public finance and budgeting frameworks. This sovereign air cover has fundamentally changed the risk calculus for the world's largest financial institutions, moving Bitcoin from the fringes of portfolio management to the center of global macro strategy. Simultaneously, the institutionalization of the Bitcoin market has reached a tipping point. As of early 2026, 86% of institutional investors globally have either secured exposure to digital assets or have finalized plans to do so within the year. The United States spot Bitcoin exchange-traded fund market has swelled to a staggering $123 billion in assets under management, with BlackRock's iShares Bitcoin Trust alone commanding over $70 billion. The entrance of Morgan Stanley and Bank of America into the space, offering direct Bitcoin allocations to their wealth management clients, marks the final integration of digital assets into the plumbing of Wall Street. This influx of professional capital is not just driving price discovery, but is actively dampening volatility and transforming Bitcoin into a legitimate macro portfolio asset, used as a hedge against the continued debasement of traditional currencies. The corporate world is also undergoing a treasury revolution, led by the MicroStrategy playbook. By early January 2026, MicroStrategy has increased its holdings to 6,783 Bitcoin, representing more than 3% of the total fixed supply of 21 million coins. Their ambitious 4242 plan, originally aimed at raising $42 billion, has been upsized to target $84 billion in capital raises to further expand their Bitcoin treasury. This strategy has introduced the BTC yield as a critical key performance indicator, measuring the increase in Bitcoin held per diluted share, enforcing a complete reevaluation of corporate accounting standards. As more public companies adopt this model, the market is beginning to value these firms, not just on their software earnings, but as leveraged proxies for the world's most scarce digital resource. This era of growth is further supported by a maturing regulatory framework that has replaced regulation by enforcement with clear statutory guidance. The passage of the Genius Act in July 2025 established the first comprehensive federal system for stablecoins, ensuring 100% reserve backing and monthly public disclosures. This law has turned stablecoins into the essential financial rails of the internet, with transaction volumes now regularly dwarfing those of major traditional payment networks. Further, ongoing markup of the Clarity Act in the Senate is set to define the market structure for digital assets, clearly delineating the roles of the Securities and Exchange Commission and the Commodity Futures Trading Commission. These legal milestones provide the zoning laws necessary for trillions of dollars in dormant institutional capital to finally enter the market with confidence. Technologically, Bitcoin remains the most secure and robust network on the planet, In 2026, developers modified approximately 285,000 lines of code to optimize network efficiency and security, while a comprehensive audit by Quark's lab found 0 critical vulnerabilities in its peer-to-peer networking layer. The scalability of the network has also seen a quantum leap through Layer 2 solutions. The Lightning Network now boasts a capacity of 5637 Bitcoin and facilitates instant, near-zero-cost payments for enterprises globally. Meanwhile, the maturation of decentralized protocols like SBTC on the Stacks network has unlocked programmable Bitcoin, allowing holders to activate their idle capital in revenue-generating DeFi products without ever surrendering self-custody. Looking ahead, Bitcoin is positioned as the primary lens through which global risk and economic freedom are expressed. Its 60% market dominance and $1.94 trillion market capitalization are evidence of its status as the digital gold of the 21st century. While short-term volatility remains a characteristic of the market, the long-term trajectory is defined by the convergence of institutional liquidity, sovereign bipartisan support, and the relentless evolution of its underlying technology. As the world moves toward a more multipolar currency system, the demand for a non-sovereign, mathematically capped store of value, like Bitcoin, is only set to intensify. We are no longer in the era of experimentation, we are in the era of production, where Bitcoin is being woven into the very fabric of global finance, providing a beacon of stability and a gateway to a new world of economic possibility.